If you take a 42 to 1 ratio right now, or even call it 45 to 1, where it's averaged for the last 100 years, the silver to gold ratio, even though it's been coming out of the ground for 5,000 years, it's 16 to 1, and now it's 7 to 1, meaning it's depleting in nature. The price ratio, largely because of, in the Western world, gold's role as a monetary metal and silver's role in industry, it's average about 45 to 1. So you take gold today at 42.40 and divide by 45, and what do you get? 42.40 divided by 45 is $95. Well, isn't that interesting? That would be where it would tell you to go, where you take the top minus the bottom, which is 46, add it to the top, that would say $96. So, I mean, if you were to see silver at the end of the year at $96, it would not be crazy at all. And if you take 42.40 and divide by 7, it's going to be somewhere around $600, 605. As insane as that sounds, that would match the geological footprint right now. So yeah, I think silver is the asset of a generation.
Silver is entering a phase where long-suppressed price levels are being pulled toward true market discovery. With gold above $4,200 and the long-term price ratio historically near 45 to 1, the implied silver value now gravitates toward the mid-90s. But when adjusting for the geological ratio near 7 to 1, reflecting rapidly depleting natural supply, the potential stretches towards $600, a level that aligns with the physical realities emerging beneath the financial surface. Andyschectman, a veteran precious metals analyst and major global wholesaler, interprets these developments as the early stages of a generational repricing event. He highlights that silver's structure has never been allowed to reflect natural scarcity due to the most prominent concentrated short position of any commodity on COMEX. Now, with sovereign wealth funds accumulating aggressively, export restrictions rising, and China purchasing Dore and concentrate at multiples of global bids, the system is losing its grip on price control. At the same time, Japan's carry trade unwind, triggered by rising domestic rates, forces massive bond liquidations that ripple through global currencies and liquidity flows. As trust erodes in Western financial plumbing, tangible monetary metals regain their rightful role, with silver emerging as the standout asset of this era. Now, we present the clips from andyschectman's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
The technical analysis would say you take the cup and handle when it breaks through the handle, which it has at over $50, that you take the top of the cup in 1980, which was 50, the bottom of the cup, which was $4 in the 90s, and the difference is 46. You add it to the top, and that would say $96 would be the next technical resistance level, if any, or that would be the projected next place to go. And if you take a 42 to 1 ratio right now, or even call it 45 to 1, where it's averaged for the last 100 years, the silver to gold ratio, even though it's been coming out of the ground for 5,000 years, it's 16 to 1, and now it's 7 to 1, meaning it's depleting in nature. The price ratio, largely because of, in the Western world, gold's role as a monetary metal and silver's role in industry, it's average about 45 to 1. So you take gold today at 42.40 and divide by 45, and what do you get? 42.40 divided by 45 is $95. Well, isn't that interesting? That would be where it would tell you to go, where you take the top minus the bottom, which is 46, add it to the top, that would say $96. So, I mean, if you were to see silver at the end of the year at $96, it would not be crazy at all. And if you take 42.40 and divide by 7, it's going to be somewhere around $600, 605. As insane as that sounds, that would match the geological footprint right now. So yeah, I think silver is the asset of a generation. And I want to always hammer it home. I'm not telling people to buy it to become wealthy. It is wealth. And the biggest money in the world is showing you that. The sovereign wealth funds and the central banks, who have now largely reclassified silver a critical mineral. The U.S. government has. The EU did it in 2023. China just did it, and they are restricting exports. And China, as we've said ad nauseum on your show, the second largest producer in the world, is flying to Peru and Mexico and buying Dore and concentrate, paying twice what the rest of the world will, and ship it back to refine it. If they're the second largest producer, then why the hell are they doing that? Because it's worth far more than the currency used to buy it. The prices are wrong. they've never been allowed to reach full price discovery when you have the largest concentrated commodity, concentrated short position of any commodity of the 1,000 plus traded on COMEX for years. It just speaks to the why. Why would it be the largest short position in this tiny little commodity? It's not for these banks to make money, is it? Sure, they do, but is there something bigger behind it? And we've talked about that forever. So yeah, what we're witnessing right now is the inability of the players that have used the Western dominance, which is big checkbooks, big pockets of cash, to continue to suppress the price naked. It's now an existential threat. And you're seeing that. The rumor is the reason they stopped is there's one big trader who took possession and would not roll it over a stamp for cash delivery, perhaps an Asian trader who wanted over 400 million ounces of silver. Give it to me. And so all of a sudden the cooling breaks down over Thanksgiving in one of the most thinly traded markets of all. So there's virtually no activity, but just those servers broke down. Right. So the point of it is that this signals, just like the LBMA said, sorry, it's not L plus or T plus 1, it's T plus 8 weeks. Right. We don't have enough manpower or trucks. The Western system is crumbling under their own narrative, and they are losing trust. And that ain't good when a system is completely built on trust and it starts to, as the water recedes, what's the old adage, I think you're seeing a different narrative unfold amongst these banks that maybe the game is over, and survival would mean breaking ranks and covering and getting out. You see one of those European banks do that, and then the whole game just implodes as the price skyrockets and shorts get squeezed and they cover, pushing the price up higher. This is a big deal, and I think it's just beginning right now. This is their decision to do this by raising rates. The opinion is that they're going to raise rates again here in December and probably in January. And the truth of the matter is their economy is under serious pressure. And this could seriously affect global markets harder than people expect, because for years or decades, interest rates were kept near zero. And all of the money, whether it be Japanese pension funds or traders around the globe, would borrow, for example, yen at near zero, and then use the excess or use that free money to buy things like U.S. government bonds. And so there's over $1 trillion worth of these bonds that are owned by the Japanese pensions that are now, when you factor in the carrying costs and a rising yen and higher rates, these bonds are now basically underwater and they have to liquidate, and that's what they're doing. This kept the yen weak. It kept the dollar strong. It kept money flowing around the world, but coming home to roost, where these higher yields that you're seeing in Japan, along with inflation rising in Japan, they're under pressure to raise rates, and they're doing it. And that'll make the yen more expensive to borrow, which makes those already unprofitable carry trades even more unprofitable. And I think these funds and investors are now unwinding their positions. They're selling their bond holdings, and they're bringing everything back to Japan, which is going to put massive pressure on the bonds in existence and the currencies around the world, because it's been a piggy bank to the world where you could borrow at nothing and buy Nvidia, Bitcoin, treasuries, anything. And that has been, Japan needs to bring back this money to support its own economy. And it's going to start doing it by selling bonds. And the question is, how quickly will it unwind? Will it send the dollar crashing? Will it send rates spiking? And when you realize, again, going back to that same thing about trust, that the whole U.S., the whole system is already under pressure. I think this has the potential to trigger massive financial problems if the unwinding of the carry trade is anything other than orderly. And rates are going higher in Japan, would be my belief.
Silver is now moving through an exceptional period of physical demand, exposing the fragility of Western delivery systems. In just the first 2 trading days of the December contract, nearly 42 million ounces of silver and over 2.4 million ounces of gold were taken for delivery, mirroring volumes typically associated with peak stress events. This follows almost 90 million ounces removed from COMEX since October, while registered inventories continue to drain at an accelerating rate. The structure that allowed years of paper-based pricing is breaking, as more participants demand real metal rather than derivatives. At the same time, one of the most prominent short positions in COMEX silver history sits against an LBMA system that is already struggling, with irregular outages and sudden transfers of millions of ounces, signaling deeper structural pressure. As trust erodes across Western exchanges, physical pricing increasingly gravitates toward Asia, where cash and carry settlement avoids the leverage and rule shifting seen in New York and London. Let's get back to the interview.
The silver deliveries ended the month at just under 20 million ounces, about 19.7 million, which it's really crazy because November is not a scheduled delivery month for either silver or gold. There was 1,267,000 ounces of gold delivered. Issued and stopped is the correct terminology. But the first day, this month, the December contract, day one, we saw 7,330 contracts stand for delivery in silver, which is 36, almost 37 million. That's more than $2 billion worth. And although it's not a record, it's close to it. April was the biggest record of just under 12,000 contracts. But to see a 2-day, that's day one, and 2-day obviously added more, but it's just insanity where there's already been 2.4 million ounces of gold and almost 42 million ounces of silver delivered in 2 days. This is the same type of volume that we've seen all year long. And, it's funny, you and I started talking about this in 2020 before anyone did. And now it's just mainstream mainstream in our business. And I think this will continue until it doesn't, meaning until stuff is just depleted. And it's becoming more and more obvious that this is an imminent deal. At the same time, you have one of, if not the largest short position in COMEX futures market, along with a massive short position in SLV, one of the largest ever. And at the same time, you have the LBMA, which is running on fumes. And, it's a situation where the delivery via mechanisms are breaking down. Almost 90 million ounces have been delivered off of COMEX this year, since October, pardon me. And I don't know, since October 1st, 90 million. It's accelerating at a level that I don't think people understand or take for granted. And I think the way that you break that up is just to simply say that, let's make an analogy, right? For years, everyone pretended that, let's call it a cardboard box was full of cookies. There's a picture of a cookie on the outside. And the thing of it, and they would trade that. But now everyone is saying, no, I want the cookies. And people are realizing that the box is pretty much empty. And when that happens, this pretend cookie game, which you could call the derivatives, falls apart. And real cookies, gold and silver, become much more valuable. And that's why prices are rising, and why the dollar and other currencies may look weak when the truth comes out. So, yeah, I think it's a big deal. There was this report that JP Morgan shifted its offices to Asia in the middle of the night, that they were told that the people had like 5 days to move their family and everything to Singapore. I believe that is false. So everything that I'm reading tells me that that's not true. I guess we'll find out and we will see, but I know a lot of people have been asking about that. The bottom line, then again, to me, is that the market runs on trust. And when you believe that you'll get delivery of what you were promised, and that trust has been built up over decades, then the system works. And you buy a contract, you can stand for delivery. The metal's there. That's why COMEX has set the price of gold and silver forever. And the analogy is like a bridge that handles a whole bunch of weight until it doesn't, like the 35W bridge in Minnesota that collapsed that I drove over 5 million times. And you're seeing that in London. You're seeing that in the COMEX now. And I don't know, I think that this is going to be a story that gains a lot of traction over the coming weeks and months. I think that the price of silver is just beginning. I really, truly, truly do. And that nonsense of a outage, a glitch and an outage of air conditioning at the CME, a cooling failure, is a bunch of crap, because only the metals markets went down. The other CME markets, like the bonds and the FX and the repo and the equity futures, well, they stayed online. It was a technical failure isolated to only one asset class, and low volume that day, yet the whole thing went down. to me, it just is telling you that things are breaking. And I don't know. I think that this is just the beginning. We saw 12.5 million ounces were transferred out of the COMEX registered category on November 26th. So, where's it going? Who's buying it? How caught are they? These are the things that I would be focusing on right now. To me, that's the most important thing to talk about today. I would just simply say that if a market loses trust in how prices are discovered, or if it can quickly shift the rules, so too will the price discovery. Will shift elsewhere. And to me, all roads lead to the same place, and that's Shanghai, which becomes the price mechanism for physical silver. It will take over for the COMEX. And, when you play these games, we've seen it now in London with the nickel market. We're seeing it here. It's what they did to the Hunt brothers. They changed the rules. They'll raise margin requirements. They'll do all of these things. But when you end up seeing, when you end up seeing a failure of trust, a massive breakdown in trust, I believe that shift will happen. And, it will kind of be like London losing its grip on oil pricing and move to the NYMEX. And, they ran it for a long time. Now they're an afterthought. The same thing will happen here, I believe, that the world will be so angered, if you will, by the fact that this has been a game that has been played for a long time by the West, that it will move to the part of the world that, the center of gravity will move towards Asia, I guess is what I'm trying to say. So, yeah, I think that that's going to happen. I don't know when, but ultimately, in a world of probabilities, I'd put a high level of certainty on that at some point, it just moves to the part of the world that is cash and carry instead of promises and rehypothecation. In other words, you buy in Asia, you pay your money, you get your bars, and out you go. And before you buy it, you have to buy a bar from one of the pre-approved refineries, and they laser etch the number of the contract that you have on that bar. There is no shenanigans there. It's all about shenanigans here in the West. What about inflation you're talking about? You measure any asset you can think of in terms of ounces of gold over the last 50 years, and prices are falling against gold. Against the real measuring stick, against the dollar, they're going the other direction. And it's that the dollar is falling too. And so it's a situation where you're right. Anytime you suppress interest rates, I think that's the issue that got the whole world into problems. You suppress interest rates, and that creates distortions and all of the asset prices that have never been allowed to find real price discovery. And it tells me that the assets that have been pushed higher, when real price discovery comes into picture in an environment of higher interest rates, it will be a religious experience for a lot of people. And at the same time, those assets that have been held down, conversely, like precious metals, it'll move in the other direction exponentially when they are free, not only from manipulation, as we're seeing the problems on COMEX and the LBMA. You manipulate prices for too long, the physical demand will put you out of business. It will bankrupt you. And I think the big money understands that. And on the other side, maybe this is why you see Buffett in $400 billion in cash, and why you see all the insiders selling every single week, $2 billion a week for the last, I don't know how long, and Bezos and Zuckerberg and all of these people selling. Maybe that's why, because they know what's coming. When price discovery really truly is allowed to manifest itself in a world where money isn't free anymore, and the ramifications of it start to profoundly expand, very quickly, I think not only will you see those assets that are ridiculously priced start to deflate, but you will also see those that have been suppressed move much higher, as there are very few safe places left yet to go. And maybe that's why we're seeing these massive deliveries. The people at that level of wealth and sophistication don't do it just for the hell of it. They know what's coming. They're 2 or 3 steps ahead of everybody. That's why I would say do what they say, don't do what, or do what they do rather, don't do what they are saying. But it takes so much effort to figure that out, that if you're not researching the way you and I do every day, you won't even see it. And it will just be one of these things you'll wake up one morning and say, my God, can you believe how high gold and silver have gotten? In fact, I got one today. I got a text from my buddy, Steve. I call him Flip, and he says to me,
Silver's behavior in the current market reflects a shift away from paper pricing toward physical settlement, creating a tightening cycle not seen in decades. Delivery volumes and inventory withdrawals are signaling a system under stress as real metal continues to be withdrawn from Western vaults at a rapid pace. Recent activity shows nearly 42 million ounces of silver and over 2.4 million ounces of gold taken in just 2 trading days, with almost 90 million ounces leaving COMEX since October. Massive short positions, thinning LBMA inventories, and rule-shifting events, including isolated technical outages, illustrate how fragile the Western framework has become. The rising frequency of large deliveries and the flow of metal toward Asia reinforce the growing shift in price discovery, especially as physical buyers bypass derivatives and demand allocated bars instead of promises. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.